I'm sure you've been bombarded with adverts for AI stock picks. I certainly have. Claims that AI can predict what stocks are going up, and they can predict how long the trends are going to last. And there's no shortage of excited traders telling us how wonderful it all is. But there's an elephant in the room. Everyone's focused on the stocks that AI is recommending, but no one is asking a much more interesting question. And that's one that affects us all, whether we use AI or not. What happens if millions of investors use the same AI? Now, I'm not suggesting that every AI recommends the same stocks. They don't. But each platform creates its own crowd, and whether it's 5 million people or 50 million, they're all being influenced in roughly the same direction at roughly the same time. I mean, granted, it takes the emotion out of trading, which is a good thing, but it does also take the thinking out as well. And they can react more quickly than ever before. Imagine 20 years ago. Yes, I do very well. So a company would release its earnings, and one investor would read about it in tomorrow's newspaper, another would be watching on CNBC that evening, and another heard it from a colleague, another trader, later that week. The market reacted over days, but today the earnings are released and AI summarizes them in seconds, and millions of users get essentially the same analysis, same information, almost immediately, and many act before they've even read the original announcement. Here's an advert I see almost every day on investing.com. It's for Investing Pro, and yes, it does seem to have outperformed the S&P by a huge amount, but that's not the most interesting thing. This is what is. Trusted by 8 million investors. That's a lot. Tens or hundreds or billions of dollars may be influenced by these systems. And it's not the only one. There are others. There's Zacks Premium, there's Motley Fool, there's AI, Seeking Alpha, and others. Typically, they have between 1 and 100 million users, and they influence hundreds of billions of dollars. Even though retail AI has millions of traders and moves hundreds of billions of dollars, in the scheme of things, it's just a little elephant. Robo-advisors move trillions. Institutional AI managing global funds moves tens of trillions. But retail AI is still enough to move markets in surprisingly synchronized ways. And so we have to wonder, what is the effect of AI stock picking on ITM? Millions, well, tens of millions, possibly hundreds of millions of traders see the same AI-generated top picks. Guess what happens? They cluster into the same trades. This makes the herd stronger, faster, and more predictable. Basically, AI pushes the crowd into alignment, so crowd behavior is easier to read. Trends form more cleanly, breakouts have more force, and reversals drop faster. If anything, this makes the crowd behavior even easier for ITM to interpret. Instead of waiting until everyone has read the financial press, received their guru's expert view, had a little chat on the forum, watched the chart for a couple of days, now AI summarizes news and highlights opportunities instantly. Alerts go out right away, and millions of traders act on these alerts. So instead of reaction time taking a few days, it now all happens in minutes. Trends start earlier, signals appear faster, all of which ITM thrives on. That FOMO, fear of missing out, is a thing, but we also know that fear is stronger than greed. Millions of traders getting the same good or bad news at the same time is going to reinforce the mood of the market. So you just got to sell alert? Well, act first, sell, ask questions later. You've just got a surefire buy? Well, better get on it before everyone else does and the price goes up. And of course, once you've committed to the trade, you're invested in being right. And of course, you want to convince others that you are right. When millions of people use similar AI tools, naturally they all start thinking the same way. When millions of people get the same summary, the same ranking, the same buy list, the same top opportunity, what that creates is information convergence. And what does that mean for the market? Well, people aren't becoming more rational, they're becoming more similar, which of course means that there are stronger uptrends, sharper downtrends, because everyone's doing the same thing. The ITM plan is based on the realization that the market is just a mass of people who are buying and selling stocks. It's not about companies, it's not about stocks, it's about people making decisions and acting on them. And AI does not change that. It just amplifies and speeds up the results. Should ITM be worried? No. AI hasn't changed the stock market at all. It has changed the speed at which people influence one another, but markets are still driven by fear and greed, and they are still just crowds of people. If anything, AI may make these crowds larger, faster, and more unified than ever before. And for investors trying to predict individual stocks, that creates new challenges. But for ITM, which simply measures the behavior of the crowd, it may make the crowd even easier to read. If you'd like to explore the complete ITM plan, along with more articles like this, you'll find everything at heathercullen.com.